Hi everyone, this is Bag It On, Stock Market Caddy. It is July 10th at about 12:30, and we're just on a leisurely Sunday afternoon, just doing some comparisons and sharing those with everyone. Feel free to check us out at stockmarketcaddy.com if you like this sort of thing. We do provide video updates though on the markets from what we call our swing machine on Sunday nights and every morning of the market. And that is just about a cheap advertisement here, $49 a month. But let me share with you the green line that you're looking at. The green line is the S&P 500 over the last 20 some odd years on a monthly basis. On a monthly basis, the yellow line, what market is that? And it looks pretty correlated, doesn't it? Almost tick for tick, right? Runs right along with it, except right about here. Right about here. Something kind of broke, at least for the moment. That market is the German DAX. That is the biggest market in Europe. That's the German DAX. Also in Germany is the largest bank in the world, Deutsche Bank, with about $72 trillion in assets and about a $20 billion in market cap. And it's been one of the worst performing banks in the world. And it is the bank that is being asked to fund the bailouts of all the Italian banks and the French banks and God knows what. Folks, things, been correlated for the last 20 years, and we have a break here. You think something's different? Different this time? I don't think so. Let's go take a look at another correlation. The Japanese yen is a what they call has been what they call a funding currency. It has been one of the cheapest currencies in the world, and what hedge funds love to do is to borrow really cheap money and put it in risk assets. Beautiful, you borrow real cheap money and get a risk assets, and you really, you get what they call alpha. Well, here's the Japanese yen, right? And the Japanese yen up here was reaching kind of an all-time high. This is still the S&P, the green line, and it was back here in January of 2013 that Abe Kuroda of Japan, the Bank of Japan, began an easing policy, and he crashed the yen. And guys like Mark Cuban, thought they were so smart, and they were, or their investment advisors. They borrowed yen, basically shorted the yen, and used the profits from that to buy other risk assets, namely probably the S&P. But look what's happened here. Now, again, this is monthly charts, so this goes back into last year. The yen kind of stopped going down. Then specifically right here in January, right about the same time gold started to break out, December, January, the yen starts taking off, is rising in value. What do you think is going to happen? Well, if you have risk assets here, if you borrowed this money to invest in this, and this stops going up in value, and your borrowed money is going up, whatever profits you got are being eaten away. So what you need to do is reduce your a couple of things. One, you have to hope that this is going to resume a downtrend, or you need to lighten up your risk assets, sell your risk assets, and convert out of this currency into something else, maybe like gold. So in order to do that, you've got to sell here and buy here, and it can kind of be a self-fulfilling prophecy. So this is the smart money is distributing this up here, and they're doing what they call unwinding the carry trade. So this, if you want to follow the CNBC crowd, the people that are buying up here, that wouldn't be a good idea. And let's take one last look at the Japanese market for its correlation. We're looking at the largest, free markets supposedly in the world, and that have some historical relationship, one in Europe and one in Asia. Now the green line continues to be the S&P, and the yellow line is the Nikkei. So you can see over here, even before '09, the market's pretty much moved tick for tick, came off the bottom pretty much together, and has moved right along. Now this is very interesting to us. Look at this, these little cat ears, right? This is in the summer of last year. Boom, boom. This is where we view the markets had really topped out. Now the Nikkei comes down, makes a lower high, made a lower low, makes even another lower low, and is in a definitive monthly downturn. What does our market do? It stops right here and breaks up. Well, this is at odds with a correlation that goes back some 20 years. I don't know about you folks, but I'm going to go with the 20-year correlation. I'm not going to buy up here In our view, the nose cone of TWA 800, sorry for the comparison, but it's what we think is happening. The nose cone has gone off. The momentum has been so strong that people sitting in the cabin still think this market is flying. And so if you're getting in here on this market, or you're still in here, all I can say is buckle up your seatbelts and get a drink, because um, it's not going to be sustained much longer. Something has to give. Best of luck to you.